Welcome to the Passive Income MD podcast, where we talk about creating your ideal life through multiple streams of income. If you enjoy hearing about this stuff, make sure to hit subscribe. Now let's get on with the show. Hey everyone, I'm joined today by someone well known to the PIMD community. This is Troy Eckard. He's the founder and chairman of Eckard Enterprises. They're an energy investment firm focused on direct ownership of U.S. oil and gas assets. He's got nearly 4 decades of experience in this industry. He's built a whole career helping high net worth individuals and investors access tangible assets like mineral rights, all of these exploration projects. People talk about working interests. These are all things that have been really, really interesting to the physician community in particular. He's got this deep expertise in oil and gas investing, and his focus on creating that alignment in terms of opportunities for our community and for investors like us. It's something that he's built over time, and he's figured this out. And every time we have a conversation, I walk away with something new, and I know you do as well. So I'm excited to talk to him today. Troy, how you doing?
I'm doing good, Peter. How you been doing? Good?
Yeah, I mean, you must be busy because everything is going on in today's world. I mean, obviously right now, in terms of when you're listening to this, everything's happening with the war. The war is kind of all the talk, especially with Iran, people talking about oil prices and just, you know, the energy crisis and things like that, and Strait of Hormuz and everything. And so I thought this would be a fun conversation. I don't even know how we start here, but Troy, like, what is the big thing that's on your mind today when it's coming to the war and how it's impacting oil prices and everything going on here?
Well, I'll make 2 comments. One, there's never been a greater time I've seen in the last 5 or 10 years, even before the Russian-Ukraine war, where the pundits, the media, the so-called experts, the senators, the congressmen are out talking, and it's really clear they have no idea what they're talking about. I mean, they don't understand. And that may sound a little bit obtuse from the standpoint, how could they not understand? But the reason I say that is, you know, let's just say you and I want to start a landscaping business, and we know plants, and we have a business, and we got all the landscaping materials. Somebody says, I want you to landscape my house. Yeah, well, you'll do this, use this is the product you're going to use, and don't worry, I can get it done for $40,000. Well, don't you want to see the property first? Well, no. Well, how do you know the grade of my yard? How do you know how steep the hill is? How do you know what the plants are? How do you know the direction of my house? So what's happening is our industry's had a major change, but the whole world has had a major change. And so today, what's interesting is we don't want $125 oil. The oil industry does not want $125 oil. We need an oil price that gives us a decent profit, but it doesn't kill the consumer's pocketbook. And what we want is a good oil price that doesn't create competition where nasty coal becomes a more economically viable fossil fuel when it's dirty, whereas natural gas is so clean. We also don't want a price that's so high it destroys green energy like, you know, wind and solar. We want a balance. And the problem is they keep pushing us to one end of the scale or the other. In this case, this is a perfect example where the president and Energy Secretary Wright and everybody else said, we got oversupply. It's absolutely a lie. If we had enough oversupply, just taking the Straits of Hormuz out would have been a problem, but not to the point of panic within 7 days. Within 7 days, the President of the United States said, look, 3 months ago, I told the Indian Prime Minister, do not buy sanctioned oil from Russia or we're going to stop doing business. We're going to give you all kinds of tariffs. A week and a half ago, he said, you're okay to buy oil from Russia, who's going to take the money and buy more ammunition and weapons to kill people in Ukraine that we're giving $100 billion to fight Russia. In 7 days, that was granted. That means there's no supply. So the American consumer needs to know we make 13.6 million barrels a day in our country. We control at least 65% of our daily consumption. The rest we have to import. Where does it come from? Russia, other parts of the country, Guyana. That's fine. But 20% comes through 1 2-mile stretch. And that 2-mile stretch is not just about a choke point. It became a real funnel point that the entire world is a hair's breadth away 2 to 3 weeks from not having enough supply to make the world go around. That should scare anybody from an energy standpoint. We literally have what I call a point of sale. You produce it at the wellhead, and it goes straight into a tank, into a pipe, into a tanker, to a consumer. You may have 3 or 4 billion barrels around the world in supply. You use it up in 30 or 45 days, you're out of oil. That's how thin the margins are. So we'll take $75 a barrel, $80 a barrel. That's a great price. We make a great return. You get to 125 to 150, you destroy the market. We'll get nice windfalls for 6 or 9 months, but the backlash is just as bad as having price of oil too low. If it's too low, we stop drilling. Now your supply goes down. Too high, we kill the customer. So we have a sweet spot. Give us $75 to $90 oil. We're all happy. We drill great wells. The economy runs great off of cheap energy, but that's not what they do to us, Peter. What they want is both sides. So how does an investor think about it? Well, here's the problem. It's no different than the stock market or anything else. If you're not in the market of owning oil and gas assets, it doesn't matter if it goes to $200 a barrel. Our phones lit up last week. We couldn't answer the phone fast enough. People are like, I want to get in oil and gas. I'm like, that's like saying you're hungry for steak and you got a baby calf. It takes a while to get that cow to the point you can actually have a beef or steak. You can't buy oil today and expect to have a reward. You got to own it and be in your portfolio. And maybe with these geopolitical twists and these different events like the war 4 years ago with Ukraine and Russia that's ongoing, we don't even know if this Iranian war is over in the next 7 or 10 days, if this is a prolonged Middle Eastern. They've shot every Middle Eastern neighbor they had. I don't think this is over. They're going to still shoot each other. But what does that really do to supply? It's going to keep supply as a very marginal factor, but a very major factor in terms of economic value. I think we have a much longer supply chain problem than anybody's letting on. I think they're trying to make everybody stay in the stock market, stay happy, stay dumb. Everything's going to be okay. That's not the case.
Obviously, most people, and again, without having you in my world, I really wouldn't be, everything that I get in terms of information just comes from whatever I get in the news about this. And again, we're probably busy people. We don't spend a lot of time thinking about this. The only time we come into contact into, thinking about the price of oil is when we go to pump our cars, pump gasoline in our cars. So I guess for the common person out there, just so we can, I guess, again, most of us are thinking about as an investment, how do we actually do well in taking, advantage of some of the opportunities out there and where are things going. But maybe just to step back a little bit from the economy standpoint, what's this going to do to us as an economy if the price of oil, like this war goes on, like you said, the supply issues, the price of oil continues to stay high, gasoline prices are high. What's that going to look like, I'd say, for the overall economy?
So let's just do a repeat. Let's just hit rewind to 2022 when Russia started the war. We went from 77 to 129 a barrel. And then even when the war, the initial 6 month, shock factor was over, we stayed between $90 and $110 a barrel for about 30 months. What that did was that drove record inflation like we hadn't seen since the 1970s. It killed interest rates, drove mortgage rates up, and just slaughtered the economy. And you had all these commercial real estate prices that were based on lower interest rates and reset and refinancing. All that financial models went out the window because you had inflation rage. Well, the only reason we haven't seen inflation lately is because they did the one thing. Energy makes up probably a third to 40% of inflation, and it directly affects everything from the plastic gloves you wear, the straw you drink out of the cup, the carpet, the clothes, the fuel. It's in everything. So if oil goes up, let's just say to 90 from where it was 3 weeks ago at 66, you just added probably 1.5 to 2 basis points to inflation. You're back to 4.5 to 6%. Now, if it's last 90 or 180 days, not so bad, but it will have a direct reflection, at least from a consumer side over the next 6 months, because it's going to take 6 to 9 months to replace the supply they lost. At 20 million barrels a day, they want to add 400 million barrels from G7. That's 20 days. In 20 days of production, you used up 400 million barrels of oil. The U.S. is going to add 170 million barrels out of the SPR, Strategic Petroleum Reserve. Big deal. That's like 2 days of global consumption. It's nothing. It's a sand granule on the beach. So the point I'm looking at from an investor standpoint is I'm going to expect cost to be higher. Unless he forces Powell to lower the interest rate, there's no reason to lower the interest rate because you're headed into deep inflation. And really, I think it's a call in order for probably stagflation. You're going to see an economy that's kind of flat, not real healthy growth without subsidies, right? And then you also have the problem of rising inflation costs. And there's one bigger factor to all this, which is the midterms. So President Trump is real boisterous, but he could be neutered in November. In November, he's facing impeachment because that's what they'll do. And it's going to be a game. Now we have a neutered or somewhat suppressed president, and we're left with this geopolitical chaos, lack of supply, SPR is empty. They're going to replace that 400 million barrels in G7. You're going to see higher oil price, higher energy price, and that's going to cause inflation no matter what he does. You can't give money away when you're at 28% interest. We owe $40 trillion. We're going to guarantee ships through the straits. We're going to insure all the ships. We're sure pretty generous with $40 trillion in debt. I think inflation is going to be coming back, and it's going to come back pretty hard.
Hey, everyone, I have a quick question for you. Are you looking for a secure and reliable long-term investment strategy? Meet Eckard Enterprises. It's a family-owned and operated firm with over 35 years of experience specializing in U.S. energy and alternative investments. Here at Passive Income MD, you often hear me talk about the need to diversify. One of the safest investment strategies available today are mineral rights. And with Eckard Enterprises, you can diversify your portfolio. Their team is committed to helping private investors like you and me identify and develop successful, diversified portfolios. With an average return on investment of over 24% across their portfolios, the Eckard team is dedicated to helping you build and protect your wealth through long-term passive income. All of this while minimizing the risks associated with traditional investments. So check out Eckard Enterprises. If you want that great investment experience, go to eckardenterprises.com. Again, that's eckardenterprises.com. Hey, what's up, everyone? Just want to ask you a quick question. Are you ready to take your medical career beyond the traditional boundaries of medicine and amplify your impact? Well, I want to tell you about the Leverage and Growth Accelerator community. Just so you know, we created this exclusive community just for physicians like you who want to expand their identities without giving up their doctor identities. It's an add-on, it's not a replacement. When we hosted our first Leverage and Growth Summit, I know many of you have been part of that, we realized that so many doctors were inspired by the what and why of entrepreneurship, but needed help with the how and when. And that's why we created this community called the Leverage and Growth Accelerator to help doctors learn how to start, grow, or scale a thriving business and connect with like-minded individuals who also want to make a positive contribution to the world. Within this community, you're going to experience a life of greater fulfillment. It's really a powerful antidote to burnout where you can leverage your medical degree for new opportunities and take command of your time and schedule so you can invest in your family's future while enjoying today. In the Leverage and Growth Accelerator, you're gonna have access to educational materials, you're gonna have insights from expert speakers, small group coaching, and most importantly, you're gonna have community support to help you realize your untapped potential. And we're so confident in the transformative power of this members-only community that we're offering the first 30 days for free. If you're interested, I want you to take advantage of this. This window of opportunity is not gonna last forever. So go now to lgacommunity.com. Again, that's lgacommunity.com. If you're ready to take your medical career to the next level and make a profound impact in the world and do it together with other like-minded people, it's time to join us. We can't wait to see you inside. I know that the physician investor thinks about this. Obviously, everything's just changing in medicine. And so a lot of people on this, at least this platform, what we talk a lot about is having diversified streams of income. Yeah. And beyond your career, obviously, people are already finding out in medicine, things are not as secure and stable as they expected it to be, right? And we all expect there more volatility in the future. So when it comes to our investments, I think most people are trying to figure out, hey, where can I find a place where I can find reliable cash flow? Also a good diversification hedge, right? When things go differently, when the world changes, that they're going to make sure that, hey, I'm going to get some other sources of income in here. What are the opportunities that people are seeing just in general in mineral rights, oil and gas, working interests? Like, what does it look like today for people? Just maybe they're pretty new to this.
Well, I'll make one comment. It has been unbelievably aware for all of us, our team, as we travel from Alaska to Florida, right? What's amazing to us, even with all the attention in horizontal drilling and shale drilling the last 15 years, we had a big doctors conference last week up in the Northeast, and literally 99 out of 100 doctors have never heard about directly investing in mineral rights, oil and gas. Even the tax write-ups and working, it's like, never heard of that. Are you kidding me? And it's because the financial advisors, the CPAs, don't get paid a commission or fee. They don't talk about stuff they don't make money on. So it's like this big hidden secret, but it's such a massive tax advantage in income. But I'll tell you really what I think your physicians really need to think about, and this comes from 40 years of working with wealthy people. When you're rich, it means you're in the top 1% to 2%, meaning you're making over $500,000 a year, maybe your net worth's $1 million, you live in a nice neighborhood, you have nice cars, your kids go to private school. We'll call you rich because in America, you're in the top 1%. What I see in the most successful investors is they don't want to be rich, they want to be wealthy. And the difference between rich and wealthy is I want my money to make me as much money as if I didn't have a job. And when I achieve that, now I have freedom and I have wealth. How do I do that? I got to own investments that generate income on a consistent, readily available basis that are not going to be having hidden landmines like cash calls, failures, debt failures, refinance, inflationary driven, suspension of revenues. The nice part about mineral rights is I get paid every single month, no matter what. It doesn't belong to anybody but me. They have to pay me every 30 days, or the very agreement Exxon leased my minerals for expires and I get their $100 million worth of wells because they don't own it anymore. So for 40 years, I've been getting royalty income every single month for 40 years off wells, 20 years for wells. All the current drilling in the U.S. is predominantly on these geological formations that'll have 25 to 100 year economic life. My great grandkids will be getting checks off these wells. So When I go from, hey, I'm rich to now I want to build wealth, I want to put money to work, give me a check, don't cash call me, no liability, no risk, and then I can choose to continue to compound that. So that's from the mineral rights side. It's just income every month off the wells that are drilled. But now I've got another problem. The IRS wants all my money. Now they're talking about New York. We want to tax the rich, tax rich. If the Democrats get back in office, this is not a political statement. It's a philosophical tax statement, which is one side wants to tax less, one side wants to tax more. There's a great chance that we end up with a pro-tax political environment sometime in the next 10 years. Well, the greatest deterioration of wealth is taxes. How do I get rid of that? Well, let's say I make $10 million this year. I'm not giving $3.7 to $5 million to taxes and watching it go down the drain. I'd rather drill a domestic oil well with working interest that's going to have a 95% chance or higher of success that generates my money back in 48 months and lasts 25 years, and I can write the entire $2-3 million of invest right off my taxes. I've been doing that for 40 years. So I call this, they say push the can down the road. Here's the way I look at it. I started when I was 20. I've been investing in drilling for 40 years. The taxes I owed when I was 20 years old, 40 years ago, I bet I haven't paid them yet. I just keep investing and I'm still pushing the taxes down the road. My wife's boyfriend can pay the tax when I drop dead because I'm not going to pay him.
Yeah, I mean, this is probably one of the biggest concerns, again, for physicians to be able to figure out places to get cash flow that are tax advantage. And so it's just always fun to learn more about some of these other vehicles like mineral rights and also working interests. Now, I have a question for you, though. Where do you see the future of this going? Because, again, we've talked about this before in the past, but again, with the future of oil and gas, where that's going, even talking about everything geopolitically, where that's headed over the next 5-10 years. Like, what is your thoughts on that when people ask you, hey, Troy, where's this going to be in the next 5-10 years?
So what I believe is every industry has what we call a step up in value. And I've seen it over 40 years. When I started, it was $11 a barrel. And we used to sit there and cross our fingers and hope we could get to $15 and have a 35% increase in the value of our commodity. And now we've kind of moved up another ladder. So it went from like 11 to 15, then it was 25 to 35, and then it was 45 to 55. We're now in a regime where really when you factor in all costs, we need about $65 a barrel to break even when you figure recovery costs, exploration costs. So the American public has gotten used to this lower price of energy. But what's funny is we're paying $2.75 to $5 a gallon for gasoline, and they've trained us that that's just the price. We're no longer getting $1.69. All I've heard for 3 weeks is oil's down to $97 a barrel from $100 yesterday. Well, if you retrain the consumer's mindset that 97 is a good price, you're going to pay $97 a barrel, which means you're going to pay $5 to $8 a gallon for gas, and that's kind of the new price. It's like bubble gum. When I was a kid, I could go down with $1 to the store and have a bag full of bubble gum. Now I go down and get 5 pieces of the same bubble gum for 25 cents a piece. I'm like, something's wrong. No, that's called inflation. That's called life. We live off inflation. I think investors need to think about it this way. The one thing that's been really proven over the last 6 years, the green energy deal did not make economic sense without subsidies. The second thing is oil and gas at its finest core, whether you think about the planet Earth and all the green energy kind of commentary, it really boils down to one thing. The cheapest, most accessible, consistent, reliable energy source is fossil fuel. Everything else outside of that can be complementary to that energy source, but I want to own the main energy source. And I want to own what feeds America every day, which is 21 million barrels a day. Because what's happening is, Peter, while we're consuming more, the reserves in the ground are shrinking. It's like looking at your pond where you get your water, and every day everybody takes a bucket of water, and the pond's getting smaller. You go like, but it's okay, there's plenty of water. No, there's not. There's more people taking water, less water. We're going to run out. We won't run out for 100 plus years. No way. We got plenty of reserve. It's just going to cost a lot more to get it out. So I look at it and say, how do I accomplish 2 goals? How do I save taxes and create a secondary income that I don't ever have to think about? I just want to make money, send me my check every month. Don't cash call me. Don't give me headaches. Send me money. When the market goes high because of geopolitical, I get a nice windfall for 6 months or a year and a half. And when it goes back to normal, I'm still crushing it because I'm still getting paid $60 or $70 a barrel. I don't know of another investment like that. And I got to tell you, this has only been around for 6 or 7 years. You didn't have this 10 years ago. It was flipping a coin like you're in a casino hoping that your number came up because it was vertical drilling. Dry holes were prevalent. Now what's happened is truly guys like you and I that are rich, have $1 million net worth, can prudently put money to work at whatever bite size you want and build a portfolio over 10 years that allows you to get out from behind that operating table, get away from that dentist chair, get away from that hospital and say, I now am wealthy because my money's making me the money I want to make. And it's really a very, very doable plan. The problem is most doctors, physicians, and other professional experts are scared of oil and gas because you don't have a website that says how to invest in oil and gas 101. So I got to find the right person. I got to learn to trust them. I got to learn that they're not going to try to skin me alive because there's a lot of bad actors in oil and gas. And is it really going to accomplish what I want? And I can just tell you, I have so many investors that did not understand oil and gas. They've been with me 4, 5, 6, 10 years. Like, this is the only investment that makes sense. And they're actually pulling out of rent homes. They're pulling out of multifamily going, why? It's just income every month. I don't have to think about it. What better way to be?
I mean, how does somebody learn more about it then? I think maybe you can recommend some resources for people to learn more about this space. Again, people in our community, whenever we talk about it, I think the level of interest seems to go up, especially because of the characteristics of the investment itself. But people always say, hey, it's hard to find good, credible information out there.
It's all skewed. So I'll tell you this, for example, we have our own app. It has tons of videos. I mean, if you go to Eckard Insights, it's got every topic you can think about. We're actually creating right now, hoping to launch it in 2 weeks. You're going to love this. I can go on as a physician without interruption, and it's going to ask me, what do you want? Well, I want to do conversion of my IRAs into a Roth, and how do I can use oil and gas to minimize taxes? I want working in for tax deductions. I want passive income. It'll lead you through every kind of possible scenario formula you want, how much you're going to sell a house for in a 1031 exchange. And then your implementation of that data is going to tell you what the possible energy assets that fit that need. Uninfluenced, nobody selling you, nobody directing you. It's going to say, here's what you should do if energy is a choice of an asset. Now, the reason why I'm not answering you like, where's the source? There is not one. I'm trying to create that, and I don't want it skewed. I don't want it skewed that the answer leads you to Eckard Energy. I don't want the answer to be skewed based on what I do. I want the answer to be the truth, and you can make your own decision. And I have no idea after 40 years why somebody has not done it. But I can tell you, when I look at people's little booklets and how to get in oil and gas, it's always like, do it this way because that's what I sell. That's fraud to me, and I don't think it's the right way to do it. So I would tell you, you're not going to get it from the public companies. You look at Exxon and Exxon, you try to find out what to do. They don't tell you. They tell you 30,000 foot elevation, right? You go to the individual states, they don't tell you any information other than promoting drill oil and gas in North Dakota because it's a great deal. It just doesn't exist. And that's what is so darn confusing. And it's frustrating because it's such a great industry. But let's put it in the simplest form. And I want to make sure your listeners hear this loud and clear. Oil and gas is real estate. It has the same attributes as real estate. I want to know, where's my deed and title? You make your money on the buy side. You got to know how you're paying for it, what you're paying. Who's going to pay you that rent and income? Well, it's major billion-dollar oil companies. So I'm now a tenant. I'm a landlord. What does it look like in terms of potential cost? Do I have landscapers and roof damage? No, I've got minerals with no cost, no liability. When I drill a well, it's like building that building. I'm going to have some costs. Maybe I'm under budget. Maybe I'm on budget. Maybe I'm over budget. But when it's rented out, I have a rate of return I'm going to get. What's that rate of return look like? And then just like cost segregation in real estate, I mean, I'm not paying any taxes last year. For all the money I made, I bought 2 buildings, tons of oil and gas. I'm pretty much not paying any federal tax. So I look at combining my real estate commercial with my oil and gas, and I'm getting it free income, and I'm building assets. That's what I want your listeners to understand. Keep doing your real estate, but complement it with the energy because they balance each other. When oil goes up, your real estate is going to take a beating. When oil goes up, your public companies are going to have less net profit. Amazon's going to pay more for that cardboard box, that fuel, that delivery, and they can't charge you more. So having a balance in your portfolio says, I kind of made myself where if one's doing bad, the other one's doing good, and vice versa. And if I do it in small increments, I'm moving toward that. Look, I'm going to tell you, I'm 62 this summer. I'm just working on getting wealthier. I'm not working on trying to make a paycheck. I'm not working on trying to be the richest guy in my neighborhood. I don't want the nicest car. You know what I want? I want the safest investment that I can rely on, that can easily give me cash flow, and that I can choose to reinvest it I want. But it's changing my life trajectory, and that's what oil and gas is doing. Changes my life trajectory. I got to tell you, you've heard me say this before, 75% of my clients honestly look like the most miserable people I've ever seen. They're so busy chasing this class and that class. And I'm like, when you die, they're not going to put your net worth on your tombstone. It's not $3.775 million, not $20.22 million. It's here lies Troy, working himself to death, chasing a net worth he's never going to achieve and nobody cares. His kids just want the money. That's my epitaph, right? So choose a better life by choosing investments that give you freedom. All Peter wants is like every client, just send me more money. Just keep sending me all the money every month. Keep going. When the price goes up, thanks for the big boosting check, but just keep sending me money. And that's really simple. I think this month we're going to pass the $250 million mark on distributions. I truly believe because of the oil increase, I bet we send out close to 150, 200 million this year alone. We might double our revenue out the door. That's all going to our investors. And that's all passive income. They're all going to go play on the beach, do what they're doing, play pickleball, have a good life. Go be wealthy. Pretend you're wealthy, be wealthy, work toward being wealthy, but stop thinking about being rich. Anybody with $1 million is rich. We don't want to be rich. We want to be wealthy.
Well, with that, Troy, people want to connect with you, find out a little bit more about this. Where can people do that?
I would suggest you always go to the website. T. Eckard, Eckard Enterprises is my personal email. My cell phone number is 469-422-1781. 469-422-1781. I get about 300 texts a day. I answer them all. I really want everyone to really know that from my standpoint, I want to help you. I want to help you achieve your goals. I want to show you the advantage of drilling. But I would say 9 out of 10 people, it's just not right for them. They're too scared. They're too nervous. They're always looking for like, how's Troy getting to me? He's a smooth talking Texas guy, and I'm sure he's got some spurs on. He's going to hook me. And the deal is, I'm too tired, too old to do that. What I really want to do is I want people to understand the oil industry has finally become a sector that all of us can buy into and own and invest in a very low risk way with tremendous tax benefits. And if it appeals to you, we want to educate you and inform you. And to be honest with you, Peter, it's because of platforms like yours where we finally get to talk to people who otherwise would never hear about energy. And I always want to thank you and your team for such a great job that you do, because there's so many people that are working themselves to death. It's time to maybe make a transition, say, what can I do where my time with my family is the most important thing, not out trying to get another, appointment, another surgery, et cetera. It's that passive wealthy income that I'm looking for.
Well, Troy, I want to say appreciate the conversation. Obviously, every couple months, it seems like new things are happening in the world that actually makes us just as interesting, or if not more. I'm sure we'll be talking again in a few months. I appreciate your time, and thanks for what you do.
Thanks, Peter. I appreciate it, buddy.
All right, talk soon. Bye.
Enjoy the show? Let me know by dropping a review in the podcast app you're listening to us in. And if you haven't already, make sure to hit subscribe. Join thousands of physicians who are also on this journey to creating their ideal lives through multiple streams of income. Learn more at our website, passiveincomemd.com. Thanks again for allowing me to be a part of your journey. See you next time.